Hi traders, this is Senior Account Manager Adam Howes hosting the Daily European Open webinar for this Wednesday, the 20th of the 9th, 2017. Hope this presentation finds you well. Just a short general advice warning before we begin. Forex trading involves trading risk capital. The following education session is not to be treated as personal advice. Forex CT provides general advice only that does not take into account your personal needs or circumstances. Okay, so we'll have a look at what's coming up over the course of this evening for the rest of the week. The main focus of the market will obviously turn to the USD FOMC rate decision, which comes up tomorrow morning at 4 o'clock in the morning. Not a healthy time for us Antipodeans, but anyway, we have to work with that. Now, the reason that this is such a closely watched announcement is because obviously interest rates are a very, very good guide of whether or not a currency is likely to appreciate in value or depreciate in value. Obviously, the higher rate of interest attached to a currency, the more desirable it makes from an investment perspective. The Fed are widely tipped to leave rates on hold at 1.25% and 1% respectively. So there have been a number of cases to support a rates on hold decision at 1.25%. The Fed are almost sort of 100% certain to leave rates on hold for a number of reasons. We've seen 2 rate hikes this year. There was a third announcement on the cards by the end of the year. Earlier in the year, there was a high probability of that, but due to poor inflation, poor GDP, and some lackluster NFP readings, as well as political instability, generally across the board in the US with the Trump administration and North Korea as well, is that we've seen a bit of a downgrade on that announcement on the rate increase expectations. So, as I said, the Fed are widely expected to leave rates on hold at 1.25% and 1% respectively. We will see some volatility around that announcement because the market really sort of closely hedges its bets on what it expects to see. Coming up shortly after that, we have New Zealand gross domestic product. Pretty healthy figures coming out of the New Zealand economy recently. GDP is no exception to that. That'll happen at 8:45 tomorrow morning, AEST. Have a short speech by RBA Governor Lowe on the AUD at 15:10. Then we have Mario Draghi speaking in Frankfurt at 23:30. And then in Dublin at 18 o'clock on Friday. So he's a busy man. And he's got more sort of roundtable conferences in Dublin shortly after. We'll then see Canadian Consumer Price Index coming in for the Canadian dollar. So just remember, at the end of the day, when we really look to announcements that really affect currency movement, we look to 3 key measures of likely rate increases. That's inflation, GDP, and employment. The better those figures are, the higher it places pressure on inflation in the economy. And therefore, as a monetary measure, the government may intervene to raise rates to stifle that demand and the worrying inflation prospects. Just to keep inflation in check, it's really important sort of measure in most governments to do that anywhere between 1% to 3%. It certainly is for the Aussie dollar. So this will create some volatility at 4 o'clock in the morning on the FOMC. So having a look at the charts here, we're seeing, a bit of movement across the board at the moment on the Australian session. Haven't really seen, as much volatility, and we don't really see as much volatility in the Aussie session as we do in the UK and the following US session. One thing we did see today is that gold has hit a pretty convincing bottom in the market at 13.05 and has seen some bit of a reprisal to levels of 13.13. So as you can see, after successive days of sell-offs, we've seen a good level of support being hit here at around about 13.05, 13.06, and currently the price remains at 13.13. Across the board, we're seeing pretty consistent daily opens on the Aussie dollar and the euro and the pound against the US dollar, and a bit of bearish pressure starting to ensue on the US against the Japanese yen, which you can see here with the opening of a bearish candle. S&P ASX 200 has opened the day higher. Oil continues to outperform at levels of 50.28, and we've seen the pound really sort of perform consistently across the board over that interest rate announcement last week at 0.25% rates on hold. But the BOE members were more hawkish in their comments about further rate increases, and that's really propelled the pound to recent highs in the market. So the prevailing theme on the Fed will be that if, as we said, if it's not so much the announcement of the actual interest rates, it's the speech afterwards, and the key focus will be on obviously the Fed Chair Janet Yellen and her comments about being either dovish or hawkish with respect to future rate increases. If we do see more dovish comments in the market about, and the prevailing sort of tone of that dovish comment would be something like, the Fed are not as urgent as raising rates as they once were with respect to inflation, or we may be holding back rate increases with a sense of, a little bit more of a relaxed approach. The market would usually take that as bearish because obviously that doesn't mean a rate rise anytime soon. If we see the opposite, which is unexpected, but if we do see the opposite on hawkish, that we may consider, with increased urgency rate hikes over the coming months, and we may see a little bit of a reprisal for the US dollar. But the prevailing sentiment at the moment is inflation is usually looked to as a good guide for such tones of being dovish or hawkish, and inflation has been lackluster over the previous announcements over the previous months. So just some short-term targets for you on the daily technicals. And we'll just give you a quick update on that. Okay, so on the AUD USD, we have upside positions preferred to levels of 80.35 and 80.50 in extension. We have short positions preferred on the ASX with levels of 5640 and 5630 preferred. Euro USD is supported by a rising trend line with targets of 120.30 and 120.50 in extension. GBP USD, we have levels of 134.70 and 134.25 short positions preferred in the market on the intraday time frame. It's interesting that Daily Trading Central have got upside prevails on the US dollar. That may be true for the shorter term, but if we see those dovish comments persist, we may see the opposite happen. But Trading Central's preference is 111.85 and 112.10 preferred on long positions. GBP JPY, we have bullish preference preferred with long positions to 150.165 and 152.70. Gold has been reforecasted as a rebound with targets on long positions to 13.16 and 13.19 in extension. And oil, we have continued bullish bias above 49.15 with targets of 50.12 and 50.40. So if you need any clarification on those economic announcements, and if you need any help with your trading setups, please get in contact with your account manager at Forex Capital Trading, and we'll be more than happy to assist you. For the time being, thank you very much for your attendance, and we look forward to seeing you at the Daily European Open for tomorrow at 4 p.m. Thank you.